Okay, welcome everyone. Let's get right into the charts. We're going to look at the indices, a couple individual stocks, and try to figure out where these things are going. So obviously the market is still continuing higher. It's in an uptrend. So there's no signals basically that are telling us that the market's going to that the trend is broken yet. Now, however, there are signals. Let's look here on the daily chart on the triple Qs tech sector. There are signals telling us that that trend is going to end soon, but there's nothing telling us that the trend has ended, basically. So the signals that are telling us the trend's going to end soon is the big negative divergence right here on the daily chart. This is a pretty good sized negative divergence that's been going on for months, and these things typically take months to build. And you can see really the last time that we had negative divergence was really back here during January of 2020. And so that negative divergence took, it really took about 2 months worth of time to play out. We're a little bit longer on this one. We're about about 4 months almost now on this negative divergence. So usually the bigger the divergence, the bigger the drop. Doesn't have to be, but that's typically how it works. And so anyways, this is the last, I just want to point out, this was the last negative divergence. So all through here for 2 months, the market was in an uptrend. The trend was not broken. However, these divergences were telling you that the trend reversal was likely. Then you get the big drop right here into, the March lows. So, that's kind of how I'm looking at this market. We are continuing to move higher on pretty low volume. And yeah, there might be another 7-8% upside. Nobody knows really how much more upside there's going to be. But the divergences tell me that the downside risk is a lot larger than the potential upside. So in this scenario, when we actually had the divergence was really starting here, right in about here. From there till the kind of the ultimate top in this move, there was about a 9% more upside. However, the downside, which came swift, was, basically a 30% downside drop. That doesn't have to be the same. Obviously, it's not, necessarily guaranteeing it's going to be the same kind of drop. But I think that there's going to be some pretty swift downside action when we get that trend reversal or that complete signal. Let's look at the hourly here. Now, we did have a sell signal right here. This was a break of the kind of this bearish rising wedge right here that we put in since October. And you had the sell signal right here. It looks like they're back testing it again. So you had a back test. Here's a back test of the broken trend line. And then they're gapping it up and, looks like they're running it up to do another back test, which is still quite a ways up there, actually. I think, from where we're at now, it's still probably another move of about another 1% or so for another full back test. Do we get up there? I don't know. The point is, I think the trend has been broken in the short term, and we're just doing back tests. So that is what I'm looking for. Now, what I'm also looking for is some sort of an impulsive breakdown, some sort of an impulsive sell signal. Yes, we had a sell signal here. Didn't play out for really much. There was no follow through, and now we're just continuing the upside from underneath the trend line. That can continue for a while. But these negative divergences on the daily chart tell me that it's likely to end soon. Just hasn't ended yet. So here's and then also the SPY. Another thing about the SPY. So here's the hourly chart, and you can see this uptrend line. This is going back to November here. This is your upward price channel. We've had 3 false breakdowns in this thing. So really whippy. Lots of little bear traps along the way. You can see broke down here. Recovered it, broke down here, recovered it, broke down here, recovered it. That's 3 false breakdowns. So, there's probably not a lot of shorts in this market, especially since you've had 3 false breakdowns. Anybody who was short likely covered. I know that I've covered I've covered my index shorts. I still have individual stock shorts. But it doesn't, I'm not long. I'm not going long. I'm just waiting for, another sell signal, basically. But there's probably not a lot of shorts in this market because of these false breakdowns in the SPY where they've caused the shorts to cover. So when when a real sell-off comes, it's likely to be a pretty sharp, steep, impulsive sell-off because there's not going to be very many shorts to cover on the way down. And that's, short sellers, if you have a healthy amount of short sellers, they will cover on the way down, which means they buy the stock on the way down. That's how you exit a short trade, is by buying the stock back. And they are kind of the buyers of last resort, or they will be the buyers into big market sell-offs because they're taking profit. And so ultimately, when you don't have shorts and everyone's long, then when the trend ends, everyone that's long tries to exit, and there's no shorts to actually cover. So that's when you get the big moves to the downside. Obviously, the reason why in this channel, I know that obviously since the March lows, this has just been a pretty strong uptrend, and I haven't been short. It's not like I've just been short for the entire thing. I was short for the COVID drop right here. And I guarantee that most likely, you can see from 2019, it was just a strong uptrend. Most people were just riding that uptrend. Nobody was short. Same kind of deal. So again, if you're looking for it, and usually you can catch it, but most people don't. Most people aren't looking for it. So for the most part, I would suspect that most people got pretty crushed during the COVID drop, and they were panicking, and then they've been emboldened, and thinking that that's never going to happen again. And so for me, I continue to look for the short trade because of the long-term bull market. All right, this is the S&P 500. This is going back to 2009. Here's your uptrend right here on the weekly chart. So you've got lots of support that you've held. We broke in 2018, and ever since then, the Fed's been involved. That's basically the bottom line. Earnings have been falling. Corporate earnings have been falling. And ever since this moment in time, the Fed has been involved in the market pretty well. I take that back. The Fed's been involved since 2009. However, they started to they started to exit the market, started to hike interest rates and reduce their balance sheet. And then in 2018, when it broke the bull trend, the Fed got back, they got re-involved with the market. So Fed pump in 2019, Fed pump in 2020. That's basically what we have going on here. But for the most part, the Fed they do all their stimulus after they're reactionary is the point. You get a big drop, the Fed steps in. So what that does is emboldens investors to think that they will never lose and the Fed will always be there. I think that creates a false sense of security from my perspective. Let's look at the IWM here. IWM, this is your small caps. It's, again, it's more of the same. It's just grinding, below this broken trend. So you have this trend line here on the hourly chart. We broke, and then it's just been backtesting ever since and just moving higher just below. So until that continues or until that stops, I don't see anything in the charts that's telling me it's gonna, it has to stop right now. I'd look for some sort of a breakdown candle, some sort of impulsive sell-off candle for a signal. Bonds, TLT, long-term treasury bonds, they're just kind of sideways. You can see here, over the last few days, we've just really been sideways. Looking at the hourly chart, it broke out of this downtrend right here, but it's just been chopping sideways. So to me, it looks like it's consolidating before its next move higher, but equally we could do a back test. Looking at the daily, we do not have bullish divergence on the daily chart. There is bullish momentum. You can see here how the momentum is kind of moving higher and price is, moving higher to sideways basically, but not diverging. So price kind of moving up, momentum moving up. No divergence from price to momentum. So we could easily have another move down in bonds and then put in a bullish divergence on the daily chart. I just don't see anything, I don't see anything in this chart that tells me to go long or short. Ultimately it's just kind of undecided. Here's gold, gold bullion, catching a little bit of a bid today, but in all, we're not really outside of this range that we've been in. So it's really just been in this kind of downward, this consolidation range. We're above it slightly right now, but it's not impulsive, breaking, you can see we broke above it, but it sold off, and it's really just been kind of hanging out around this area. So, this is the resistance area right now, is about 1864. And I think it's likely we hold here and sell off and head back down. Looking at the daily chart here on gold, we just continue to kind of consolidate around this support line. So, what I'm looking for is an impulsive breakout from this support line. Otherwise, I think we continue to contend with this trend line on the daily right here. And until we see that, we'll have to just continue to watch it. The other thing is the dollar is not really selling off. Here's the hourly chart. The dollar's flat today. So the markets are up, and yet the dollar's not selling off. That's something to watch, because this market, if I go to the daily here, you can see that here's when the Fed stepped in, basically right here. And this market has really been moving higher on a falling dollar. So the dollar's been moving lower. And yet today, and this is just one day, but you can see we have this bullish falling wedge right here. We broke out and we're not falling. There's some support here. So the markets are moving higher, and yet the dollar is still holding its ground, looking as if it wants to continue to move higher. So that's why a couple of videos back, and this doesn't all play out in one day. When I put out a video, it takes some time. I just want to get everyone kind of prepped. I put out a headline saying, watch the dollar, the dollar can be a wrecking ball. And that's kind of what this is continuing to tell me. So, the dollar is not selling off. I think it's possible that the dollar is going to continue to move higher. And if the dollar really starts to move higher in any meaningful way, the markets, that's when you're going to get the market correction or whatever's to come in the market. So watch the dollar, continue to watch that. That's going to give you guys a tell. Right now, I'm seeing signs that because the dollar's not selling off today, that I think it's likely that the markets are going to start selling off and the dollar is going to move higher. But until you see that dollar starting to move higher, and a sell signal or some sort of an impulsive breakdown in the markets, and we just have to continue to wait. Also, watch the financials. You can see financials are down today. They're kind of weak, basically, relatively weak. Today, for the most part, is all about the FANG stocks. The markets are rallying because the FANGs are catching a bid. I don't think there's any real reason why they're catching a bid. I think it's just, again, kind of this whack-a-mole market that we're in, where one thing goes down and then everyone goes to the FANGs, and then everyone gets out of the FANGs and rushes to the small cap kind of hype names, story names, and then they go back to the FANGs, and it's just this back and forth right now between those two trades. So today looks like today's the FANGs are popping, but the financials are not moving higher. They're showing kind of relative weakness. They could just be taking a breather, obviously. We haven't broken any support yet. So on XLF, I've got about 3060 as the support level. We break that, and we're going to look to really this trend line right here, which comes off the 2011 lows right there on this daily chart. So you can see lots of reactions along there. We held as resistance right here, kind of held as resistance all through here, and then we had a breakout. So it will become obvious to the market that this was a false breakout if or when we break down below this trend line again, especially an impulsive breakdown. If you get an impulsive red candle breaking down below this, that's when the market's going to realize that this was likely a false breakdown and we're heading a lot lower. Until you see that, this was a breakout, and you have to take it for what it's worth. So back down to here, if we come down and hit support and it holds, we could move higher. Here's Apple. Something interesting to note on Apple. So here's all the things I see in this chart. This is a daily chart. You can see negative divergence right here. This is big negative divergence. We really didn't have negative divergence until, we've had it in a couple areas, but I think, this is a big negative divergence that's really been building for quite some time. Obviously, you know, I can see some negative divergence right here, you know, a little bit of negative divergence right there. Those are small negative divergences. And even this small negative divergence here, which continued to build really all through here, that played out for a drop from the high to the low of 34%. This negative divergence is a much larger time frame. It's a big period of time that this has been diverging. Now, so we have that. Now look at the trend line coming off the March lows. You can see we held support right in this area, held support here, held support all through here, and then we recently broke, but it's not impulsive. That's the one thing. You broke trend, but it's not an impulsive sell signal yet because you don't have that big breakdown candle where the sellers really come in. Rather, what it did is just, you know, sold off a little, and then it's just been consolidating, kind of hanging out down here. Today we're getting a back test. So it's objective to short Apple on a back test of this trend line up around 134, or depending on when or if we get up there. But it's not necessarily a sell signal because you don't have that impulsive breakdown. That's usually what you want to see. You want to see an impulsive break of support. You want to see when you break support, all the sellers run in and start, you know, dumping the stock. And we just don't see that right now. So I'm not really looking to trade Apple, but I will watch to see what it does if or when it gets up to this trend line, whether it gets rejected, and then I'll start to look at a break of the lows. My sell signal on Apple is likely a break of these lows right here, 126.30. We come down and break that with an impulsive breakdown. That would be a swing trade sell signal, and you're likely to see some more downside in the indices. Microsoft catching a big pop today, up 4%. That's a big move for Microsoft. But if you roll out and look at the daily, you know, we've really gone nowhere. For quite some time. We've been up here in this area several times already, 4 times really, once, twice, 3, 4. This is our 5th time up in this area. So ultimately what we're really doing is just kind of chopping sideways, going up, breaking down, going up, breaking down. Until we see that breakdown. Same with Amazon. You can see pop today, but again, really gone nowhere since July. So it's just gone sideways. Google, I believe, is the one that's uptrending. Google's up near a resistance line right now. This is kind of an objective area to potentially short. What I'm going to do, though, given the resiliency of this market uptrending, ideally, I'm going to wait for breakdowns of these bearish patterns to the downside. So rather than wait, if it breaks above, which they've been doing a lot of that, where they break above these bearish patterns, I'm going to wait for the breakdown of the support line down here, an impulsive breakdown. That's going to be the sell signal. Netflix catching a bid. So Netflix isn't the cleanest chart, but you've got this here. This is coming off 2013 on the daily chart. This is the trend line that Netflix has been in, and you can see it's held that support line several times. Recently broke back here in 2019, August of 2019, and now it's just been a big mess, basically. It's just been really untradeable for the most part, because you had a breakdown, then they recovered it, then it broke down again, then they recovered it, broke down again right here and here. They're recovering it with a gap down. Just a big, choppy, volatile mess. So I've noticed that, and I haven't been trading Netflix because I don't know which way it wants to go. When you get a breakdown, they've been breaking it back higher, and then when it breaks higher, they break it back down. So it's just all over the place. So I'm just going to watch this, and I'll look to trade something that has a little cleaner of a chart. Commodities are selling off a little bit today. You can see Joe, which is coffee, ETF, wheat, and corn. All 3 are down. So again, that goes to show the strength. The dollar's hanging in there. Commodities aren't doing well, at least ag commodities. Gold is up a little bit. So kind of mixed signals today. Again, I'm going to watch the dollar. I saw an article on CNBC where Goldman Sachs was recommending fast food companies like McDonald's, so I thought I'd take a look at the chart again. This is a messy chart, but here's the point that I want to make. Okay, got my chart cleaned up a little bit. All right, so McDonald's, if I look at the weekly chart, this is the trend line that I think McDonald's has been in. This is coming off the 2003 is really where McDonald's started its bull market, and it's been in a bull market since 2003. So quite some time, really. And you can see here that it's basically held support right in here, held support right in this area, held support here. It's chopped through it a little bit, but held support here. Then we broke, and you can see we're trading really below that trend line now. We had the impulsive breakdown, we had a back test, and that back test has failed. So to me, it looks like McDonald's is actually potentially going to start a new bear market, and that's because it's below this trend line, and continuing to trade below this trend line. So what I'd look for is more further downward price action, some sort of an impulsive break. Going to the hourly here, you can see, we've been kind of trading on this shelf right here. So ideally a break of, this area, 206 or so, impulsive breakdown and close might set this thing in motion to the downside for the next leg down. Otherwise, I could easily see us coming back and doing another back test. So it's objective to short up at this trend line resistance up here, or potentially on a break of the recent lows right around 206. It's not really objective right where we're at. Well, I'll point this Chewy out. Now, on the daily chart, we've got a couple things going on. Here, on the daily, on the RSI, we have negative divergence. See that right there? So downward momentum on the PPO and the RSI, and made a new higher price right up here. This was a divergent high. So to look at that on the hourly chart, you can see we had this trend line right here. We're starting to break it. Looks relatively impulsive. I'd like to see the selling increase. Right now the selling's kind of stable, steady selling, but it's not actually accelerating. That would be nice to see that selling accelerate on the hourly candle. But if we continue to sell off, then going back to the daily, I think it's very likely we get back down to this trend line down here, which is the more major trend line in this stock. From where we're at right now, that's a drop of roughly 27 to 25%, depending on when we get there, maybe 20%. And that will be support. And unless we break that major trend line, then that's likely going to hold as support. But as of right now, I can see with the daily negative divergences, a high likelihood that we do get that sell-off back down to the trend line. Here's Nike. Looking at this hourly chart, you can see we have a bearish rising wedge right there. Nice, clean bearish rising wedge. Broke to the upside on earnings, but have failed. Broke to the upside again, and then failed and broke all the way down through the bottom support, which is this uptrend line right here. All right, so we had a reaction here, reaction here, reaction there. 3 reactions needed to make a trend line, so that is a trend line. And and we also had a reaction right here. That's a reaction from underneath where we broke down, back tested, and failed. They're running it up and doing another back test today is what it looks like. So again, I still think that this looks like it's going to break lower, but obviously, we have to see it reject at resistance. But resistance is an objective area to add to a short. So if it's going to continue a little bit higher and maybe do another back test of the trend line, that's a high. That's the area where, that's the lowest risk area to take a short position. Why short this thing versus go long? Well, because you have a bearish rising wedge pattern, which was broken to the downside. On the daily, you have negative divergence signaling that the momentum is fading to the downside. So that's why you short it versus go long. Citi here showing relative weakness again today, down a little bit. Nothing crazy, but still down. You can see on the daily. So far, this resistance has held as the top up here around 68.60. That comes back from let me roll out. We had a little reaction back here in March 2020. So that has held as resistance. I'm looking for, I am looking for it to continue to the downside. Whether we get a bounce and then it rolls over, I don't know. But I think trending to the downside is what I'm looking for over kind of the medium term. And so, yeah, that's really all I got. Negative divergence is still intact on Citi, and the price action is starting to move down as well. So, again, this was your divergent high. This peak right here was another divergent high. Since you made that high, the negative divergence price is starting to, converge with the negative divergence to the downside. So, price is starting to move down. Momentum is signaling downside momentum. Looking for continuation of price to the downside on this one. That's really all I have for today's video. Just kind of a recap. Nothing spectacular standing out in the markets today. Kind of just a update, basically. I don't have interesting things every day, but I think it's important to at least kind of understand what the market's showing us on a day-to-day basis so that we can be prepared. So thank you, and I'll catch you guys on the next